we are going to start right now with our crypto panel, Crypto Assets versus Tokenization, Hot Topics in 2024. And we decided to structure this panel along three verticals. My name is, by the way, Alexander Bechtel. I'm the head of digital product strategy at DWS. The panel is going to introduce itself in a second. Let me just give you a very short glimpse on this panel. So we decided to structure this panel in three verticals, which usually describe well the whole crypto landscape. So this is going to be a round trip through the crypto digital asset space today. We are going to start with cryptocurrencies, so Bitcoin ETF. We are going to talk about where is the industry in Germany and in Europe, what are banks doing, what are asset managers doing when it comes to crypto. Secondly, we are going to talk about digital money or tokenized money, which means central bank digital currencies, stable coins, maybe also tokenized deposits, again going back to the banks. And then last but not least, we're going to go into the big field of tokenization, tokenized assets, and we're going to talk about concrete use cases, what gets better, faster, cheaper when we tokenize assets. And at this point, we also definitely should talk about why is everything taking a little bit longer than what probably we all would have thought a couple of years ago. With that, I would like to start a very short introduction round, maybe just going from left to right. Christoph, maybe a quick intro.
Alex, thank you for having me here. Christoph Hock. I've actually two hats on. So on the one hand, I'm running trading activities at Union Investment. And on the other hand, from 1st of Jan onwards, I went into my new role, which is a great pleasure for me here to share. I'm heading tokenization and digital assets at Union Investment. Key topic for us as one of the big asset managers here in Germany. So first workshop on blockchain we've had back in 2015. Tokenized assets we are focusing on since 2018, 2019. We believe this might be a big game changer for the entire financial industry. And therefore, in the very best interest of our investors, and that's where we are looking from, what's in it for the investor, definitely a topic to be on. Thanks,
you.
Alex.
Great. Hello, everyone. My name is Patrick Stäuble. I'm the founder and the CEO of Teylor. Teylor is a small business lending platform focused on the German market. We're a Swiss company, but focused on Germany. What we do basically is we've digitized the entire process of giving loans to small businesses. We do about 200 to 300 million euros a year of funding in Germany through various vehicles that we've set up in Luxembourg and some other markets. And at the same time, what we also do is we license our technology to banks throughout Europe. I'm here today not as one of the crypto guys or one of the tokenized guys. We are hopefully soon to be an end user or the benefiter of this fantastic technology, and that we are working on tokenizing part of our private debt portfolio so that we can finally not just digitize the front end of our processes, but really end-to-end digitize the entire value chain. That's our goal.
Perfect. Thank you. Hi, my name is Saul Nowotny. I'm with the DSGV, which is the association of the savings banks, so the Sparkassen-Finanzgruppe, as it's come to know in Germany, where I'm leading the blockchain and digital assets efforts. And I've been in crypto since 2016 in various roles with international stock exchanges, also banking and consulting. And happy to be here and talk about 2024, which is going to be a pretty interesting year, I think, in crypto and digital assets.
Perfect. Thank you very much. So my name is Miryusup Abdullaev. This is one of those names you need 3 times to pronounce to get it right. Short one is Mir. I'm part of Deutsche Börse digital asset team. Since 2 years, been part of the team, really defining and hopefully driving, implementing the strategy that we have. I'm really humbled to be among this group, to be very honest with you, so I really look forward to very good conversations. Thank you very much.
Thank you all. And Mira, I would actually like to start with you. We have all observed 10th of January, I believe it was, the approval of the Bitcoin ETF, which was probably the news in the crypto space, now diving into our first vertical cryptocurrencies of this year. So do you think now this is the end of this long and hard crypto winter? We have seen the flows are quite positive. The products are demanded, they are bought. people are investing into this. What is your view on the Bitcoin ETF and kind of the momentum in the crypto space overall?
Sure, thank you very much. So basically, maybe first thing I want to mention here is coming out of the neutral role that the market operators such as Deutsche Börse have. I usually hold back with my opinion on price developments, right? And I think this is the right thing to do. But in general, I think probably stating the obvious in the meantime, the approval of spot Bitcoin ETFs in the US is a good thing for adoption of Bitcoin as an investable asset, right? Just think about that massive amount of investors, some of them, or maybe even majority of them, actually new to Bitcoin as an investable asset, actually can now buy Bitcoin, invest in Bitcoin through their established trusted broker accounts, right? So this can only be good. I don't think it's going to stop there either, so I think it's going to follow with some further cryptos, probably not all 20,000 of them, but certainly with top 5. It's foreseeable that we will have similar instruments going forward.
So Mir does not want to talk about the price, so let me try it maybe with Christoph or Patrick. It has been a huge announcement, right? For everyone in the space, the Bitcoin ETF was a big thing. It has been announced one day in advance because the Twitter account of the SEC had been hacked, right? Which is such a crypto thing to happen, right? It had to happen around the Bitcoin ETF. And then the price didn't move at all. So what's your explanation for no price movement at all after this announcement?
Alex, despite the fact that we are asset manager, no investment advice here from our side, but also looking at the traditional investable universe we are focusing on, fairly often you have this kind of travel and arrive scenario. So meaning a kind of pre-positioning ahead of the event, and in Bitcoin, Ethereum, all the correlated cryptocurrencies, we've seen a significant uptick over the last month. I guess Bitcoin last year, when looking at the performance charts across all asset classes, Bitcoin with plus 163% yearly performance, 23, one of the best performing assets. So I guess lots of the speculation, and it was widely anticipated, I guess, and also expected that SEC might come with this announcement, was already reflected in, in the price of Bitcoin.
Yeah, what I think is interesting, the fact that it didn't change at all, for me, is more of a symbol of how many, especially retail investors, probably have burnt their fingers as well in the last couple of years. I think if you know, as many of us probably do, if you're on Reddit and Twitter and all the forums talking, this Bitcoin ETF has been a huge topic for many, many, many years. And I think there's probably not a month that goes by without some speculation about when it was going to come. But the fact that it's now finally really extremely accessible, and with a seal of approval from the SEC, and the price didn't jump, shows that I think there's probably, maybe not in Bitcoin, but certainly in a lot of the asset classes, or a lot of the tokens and related asset classes, people really seriously burnt their fingers and are waiting on the sidelines before they jump back in again.
Yeah. So something I had to learn after I moved over from banking into asset management is that usually traditional asset management products, and let's now use ETFs, for instance the Bitcoin ETF, they are usually not bought, but they are sold, right? Which means it's not that you put them out there and then people just run and buy them, but it's usually you actively have to sell these products, right? And I think it's not a surprise that all these big asset managers, BlackRock, Fidelity and so on, they are not starting in the first week talking to 1 million people and trying to sell these products, but this is something that's going to come over the next weeks and months, right? So I'm mid to long term bullish when it comes to the effect of this Bitcoin ETF, but given that it's now this distribution machinery is just getting started now, right? This is probably why we haven't seen an immediate move.
If I may jump in, that's definitely a big factor, basically channeling the inflows in the ETFs. Maybe a bit of a view on the European field, right? We were having a synthetic means of price exposure to Bitcoin and so many other coins since about 3.5 years now. I remember also today in summer 2020, we've introduced first exchange-traded product on Bitcoin, centrally cleared with all the usual infrastructure you have. So it's also interesting to see how the dynamics overseas, which has a momentum right now and will be pushed, sold by the Wall Street, gonna impact on the crypto ETP scene in the euro. It's gonna be interesting to see. One of the effects we already saw is that the management fees of these products in Europe
I was just about to mention that,
are actually pulling towards the lower fees that you have in the US. But that's certainly not the end of it, right? So it's going to be interesting to see.
Yeah. Maybe I can add one thing from the neutral perspective, not being here as an asset manager. which gets overlooked. I'm not completely sold that the inflows are going to be net positive, as there's certain like GBTC holdings being given into the market at the same time, and it's still open to discussion what the real value is and what's the target audience, right? I think it's clear that it's good to have the vehicle, the optionality to buy ETFs for institutional investors that otherwise wouldn't have the possibility to buy the actual tokens, right? So I think for a segment of institutional investors, probably in this room also, it makes sense. But the jury is still out on whether it's going to be a net positive for the retail investors, because as Miryusup mentioned already, there have been ways to get crypto exposure in your traditional portfolio before, and you can buy the actual crypto, right? So I think it's going to be interesting as the asset managers ramp up their sales forces to see, are the retail investors going to buy the asset in a fund structure, or are they going to buy the real token that has actual utility and the community behind it? So I think it's going to be very interesting to see how that works.
I guess, Alex, one point to add. This morning we talked lots about regulation. And from a traditional asset manager's perspective, we as Union Investment, we manage about 460 billion euros for our investors, retail and institutional ones. We have a trustworthy relationship, we have a fiduciary obligation, and therefore regulation is really a key requirement for us. So proper governance when acting on various trading platforms, when getting involved in assets. And I guess this is one point, looking a couple of years backwards, which was clearly missing in the cryptocurrency arena, that there was no proper regulation. And when you look at incidents or accidents based on human fraud like FTX, in a proper regulated environment, this never ever would have happened. And therefore, regulation is really the key basis for us to get involved in these type of products.
Yeah. So maybe I'm a bit too impatient, but when we say, okay, we have now solid regulation, we definitely have the client demand when it comes to crypto, right? So at my two and a half years at Deutsche Bank, not a single client came to me and said, Alex, can you tokenize a piece of real estate for me? But a lot of clients came and asked, when does Deutsche Bank finally start offering crypto trading? So there is client demand, right? We have the regulation. So I wonder, why isn't the traditional financial industry why isn't it really there, right? We have most of the banks, and I'm part of the traditional financial industry, so this is as much question to myself probably. Why is there not happening more? Like, so maybe starting with you, kind of as representing a big portion of German banks, what do you believe, what are the hurdles that prevent you, for instance, from offering direct crypto trading, for instance?
Yeah, I think you have to break the question down. I think it's about what do you want to achieve here, and I would slightly disagree in a way that I do think the financial industry and bank is embracing crypto as an underlying technology, very much so, and has been so for years. The question is, do you need to, as they say, YOLO more retail money into crypto? Like, is this the value add that traditional banks can and should bring? And I would make the case, first of all, there's no German bank, whether it's Deutsche Bank, whether it's the cooperative banks, that have a mass market retail crypto offering at this point. And I think maybe the bigger issue that concerns our member banks and their customers is getting the benefits of tokenization in other ways, shapes, or form. And I do think if you would have asked 100 years ago, do you need a car? People would have said, I need faster horses or something. I think we have this kind of analogy at work here too. And I think banks look at crypto a lot in terms of back office, process efficiencies, tokenization for debt instruments. We like that topic a lot as well. We like it for real world assets, renewable energies, real estate and stuff. And so I think it's like the iceberg phenomenon. There's a lot of work being done underneath, and it's only a small portion that is currently visible in the market. But as a term of blockchain infrastructure and digital assets and more real-world assets being tokenized and represented in digital form, I think there's a lot of agreement that we are embracing this as a technology.
So let me maybe take the opposite position to one thing you said, which is kind of this YOLOing into crypto. I'm not sure if it's about that. I mean, our narrative is at DWS, and we have close to 900 billion assets under management. Our narrative because we are going to issue cryptocurrency ETCs soon, right? And we definitely, a bit similar to what Mir said, we are not taking the position of advising our clients to go all in crypto. We are actually taking a neutral stance. But the reason for why we decided to offer our product suite to crypto was we have been observing, and we are observing, that our clients are demanding these products. And as long as we, meaning the traditional financial industry, are not offering safe, regulated rails into this asset class, our clients are kind of pushed to cryptocurrency exchanges sitting on the Bahamas and basically going broke, right? So kind of our narrative is, yes, we see that our clients demand this asset class, and this is why we want to offer reliable, safe, regulated rails for our clients to get exposure, so to say, to this asset class.
Can I get a direct response? First of all, totally agree, but now you're talking about custody solutions, and that hasn't been present in 2016. When I started, there was no institutional custody. Now it's there. Regulated rails and custody, 100%. I think that solves a big issue. Giving more retail money in the space, let me make one controversial point with two asset managers on the stage, but I don't have to stay in Frankfurt. I can go back to Berlin, so it's fine if people don't like me. But the point is, if you are moving Bitcoins and Ethereum in an ETF structure and you're moving it on these traditional rails, you're kind of like missing the point of an emerging technology, right? Because then I get the point. I'm pro SEC approval. I'm pro optionality. There's ETFs for any kind of asset class. But are you able to answer like what happens to self-custody, what happens to using your tokens to validate transactions, to use them for staking and lending, use ENS, mint NFTs, like all these things that make blockchain a really disruptive technology. You're sort of like putting this into this safe wrapper, but you're putting it in a cage, so to speak, and people lose the actual utility of the token. Right? So just as a food for thought, there's a lot of thumbs up for the ETF, but I think that gets forgotten a lot. The one thing is financial movements and capturing part of that, but the other thing is the actual technology underneath it. So
Alex, also happy to comment from a cooperative banking sector, and we as Union Investment, we are in this area. The asset manager, the Z Bank, is the branches we have across in the company are the retail client facing institutions, also focusing on direct investments. Point number one, regulation. I mentioned it before, and regulation goes hand in hand with trading places. Regulation, box ticked, we get MiCA, which also focuses predominantly on e-money, asset reference token. So that's what we're going to see in the second half of 24. Key requirement. Point number two, we need reliable exchanges. As Union Investment, we never ever would have onboarded KYC'd an FTX, which was kind of modern bank robbery, where you've had market making, someone providing a trading platform and also custody, all hand in hand without any ring fencing. So FTX, from my perspective,
and without bookkeeping,
without bookkeeping,
like that,
from my perspective, it was the kind of most levered, biggest hedge fund on earth, and not a proper exchange. So these are the key requirements, governance, which is needed. Second point, why do we not see more offerings? I guess regulation was kicking in, is kicking in, and we just see the kind of tip of the iceberg. You guys, you most recently came with an announcement on ETCs. You will offer. We also at Union have one fund in the pipeline where I'm not publicly allowed to share more details. But
we are among us, so
more to follow. This week, Suat Benkreda, board member of the Z Bank, in a Bloomberg interview, she was sharing that with our retail branches, the Z Bank plans also offerings in a pilot project to certain clients. So there's definitely more to come, and in AI, ChatGPT, we've seen 1.5 years ago a kind of hockey stick movement, and I'm sure looking at cryptocurrencies, but also, that's my third point, looking at the entire ecosystem token economy, we definitely will see more. And that's also from our perspective a key observation. So we talk about cryptocurrencies on the one hand. If you look at the entire market cap of cryptocurrencies on a global basis, we are talking about 1.7 trillion US dollar global market cap. Look at Microsoft, market cap 3 trillion US dollar, Amazon 1.5 trillion US dollar. So cryptocurrency is a small piece of the entire puzzle, and from our perspective, the key topic is token economy, the key topic is digital assets, which is a significantly bigger theme we are finally talking about, and that's what you were alluding to. It's infrastructure, it's how do we face our clients, and it's also about products. But I guess more, as you shared in your intro, to follow in this session.
Exactly. I think that's a good point to move on to the next vertical we have announced with this, which is the digital money vertical. And I just want to make one announcement. I have an iPad here, and I hope I have the right frame, but you can ask questions, right? So I'm going to see your questions. Just type them in, send them here. Whenever you feel like, I will try to include them in our discussion. Digital money. So that's, I mean, I'm a payments and money guy, so this is a topic I love, so I will make sure that we don't spend too much time there, that we have time for the tokenization in the end. And it's also a complex topic, right? Because in order to really understand what digital money is, you would have to understand what money is. And there are already 3-4 different versions of money. We have cash, we have money on central bank accounts, we have money that's issued by banks, right? So it's a complex monetary and payment system that we have, and now we try to bring that onto a blockchain, which doesn't make it easier. But anyway, Mir, for you, maybe first question. When you look, maybe also from the point of view of an exchange, right? So you're going to offer the exchange of hopefully tokenized assets in the future, to a certain extent also crypto, but then sooner or later you're going to need the cash as well, right? Because usually the asset is only 50% of the transaction. So how are you looking at that missing cash leg?
Sure, Alex, thank you. Allow me to really very shortly go back to what Christoph said when he said we need exchanges that can be trusted. I don't want to let that be left alone. So where clients need us, exchanges will be there for sure. So we talked about regulatory clarity and trusted partners as two drivers, I think, of adoption of Bitcoin a bit more than it has been today. I'd like to add the third point. Everyone wants to be in the Bitcoin game, but no one really believes this thing grows into a huge business at this point in time. So really allowing clients using the existing infrastructure to be in the native crypto game is, I think, also an additional unlock, right? So because every additional system you create needs to be integrated into today's very complex legacy infrastructures. And that's actually might be keeping certain people to do it. And if you sort of insert into it with little invasion into the existing processes and systems, that will be, I guess, powerful. And we as Deutsche Börse definitely are well positioned to enable that. So that's just for that point. But now to tokenized cash, right? So to realize the promises of tokenized economies, I think it's clear we need fiat on-chain. The closer the quality of the legal tender of this fiat on-chain gets to the off-chain fiat, the better. Obviously speaking about the central bank digital currencies, but we know it's a long road. We know it's going to take time. Is it going to be on-chain or is it going to be blockchain, off-chain solutions still open? So it actually opens a field and a space for a pretty interesting competition, right? Right now we see two categories emerging. Number one, stable coins, as widely known, so privately issued on-chain, which are pegged to fiat money. Second one is deposit tokens, such as of JP Morgan and some other big banks also announced it. So I think it's good to have certain solutions sort of overbridge to the final solution. But the issue I see here is that we already have a number of versions in each of the categories. So we're basically working hard as an industry towards a fragmented picture for tokenized fiat money on-chain, right? And I mean, at the end, fragmentation is not best for the end client. We can live with it, but it's not good for the end client, right? Think about how you would travel across European Union before euro was introduced, converting all the D-marks into Czech crowns or whatever. And imagine how it got better after euro was introduced. You're just traveling with euro. This is how I see this going to develop going forward. But the key question for myself is, so what's the natural candidate? What's the natural winner to overbridge the time until we have the end solution in form of central bank digital currency? And for that, I don't have an answer myself. It's probably more coming from people who are at the forefront for this topic.
Yeah. I mean, maybe a question to you, Christoph. So, of course, we hope that stablecoins are going to be that at least that bridging solution, because we are going to issue one. We have found a new company called AllUnity that's going to issue a euro stablecoin. And Christoph, in that regard, I would be interested, linking up to what Mir just said. You are a trader by heart, right? That's your background. When you trade tokenized assets, what are you looking for on the cash side? I mean, of course, your answer is going to be central bank money, right? This is what you will always prefer. Yeah. But let's assume it's not there yet. As Mir has said, the wholesale CBDC is not there yet. What's kind of an alternative solution for you to settle these trades?
Yeah, so as you were rightly saying, Alex, wholesale central bank money, that's from our perspective the ultimate topic. Why? Because point number one, what's important for us, which kind of issuer risk do we have? So for instance, take US Tether, world's biggest stablecoin as of now, with close to 100 billion assets under management. By the way, these guys, they come with quarterly reportings, and just an anecdote. 58 people work for Tether. P&L for the fourth quarter last year, $2.7 billion US. Just as a comparison, Goldman Sachs, by incident, they came with their regular quarterly reporting pretty much same day. Goldman, they made 2 billion. Tether, 2.8 billion. Why do they make this?
Now you understand why we do stablecoins.
Yes. Very good point. How do they make this money? They do not pay any interest to the investors, and on the other hand, they invest money they get from the investors in US T-bills. At the moment, we have Fed fund rates about 5.25%. So it's fairly easy calculation. $100 billion AUM times 5% annualized. It's about 5-6 billion they will make. Looking now from an asset manager's perspective at stablecoin, clear answer is we want to have a settlement vehicle. So in the current world, we have so-called DVP, delivery versus payment. We have typically, when we trade in secondary markets, a 2-day settlement. When going, for instance, in new issuances in the fixed income world, we have a 5 or 7-day settlement. And to have atomic, instantaneous settlement, what our goal is, so meaning a T0 settlement, we need assets on chain and we need cash on chain. And a stable coin is a vehicle to get these asset transactions settled. But on the other hand, is it an investment for us? Is it something where I would like to have overnight my money in? Take a flagship fund, 30 billion assets under management when we have a cash quota of about 5%, so 2 billion euros. Imagine we would invest in a stable coin where we don't get any interest because this is kept by the owner, by the issuer of the stable coin. Would we fulfill our fiduciary obligation with our investors? Clear answer is no. And then therefore, for stablecoin, there are different kind of use cases. From a pure asset manager's perspective, clearly it's a not preferred vehicle because no interest, issuer risk. On the other hand, take a retail guy sitting in Argentine or in Turkey where you have an inflation rate north of 50%. Doesn't this guy care about do I get overnight interest rate? Clear answer is no. He wants to have a fairly stable dollar-pegged instrument. Or imagine you are a Pakistani worker working in Africa. Your family is sitting in Pakistan, and you want to send money into your home country. In the current fiat world, you would get about 15% deducted from what you are shipping to your family, and it takes 2 weeks. Using a stable coin, it can get done in a fairly quick manner. Also, the guys in the crypto universe, they typically, in the DeFi universe, they typically make use of stable coins. So therefore, it's not a yes-no. In terms of stablecoin, it really depends on who's making use of it.
So maybe one more question on the digital money, and then Patrick, you need to get ready because I already have a couple of questions here on tokenized securities. So we're going to have enough time to address some of those. So maybe for you, so when we look at the money supply today, M2, it's usually 80–90% is actually bank deposits, which means banks are the main provider of money today. Now we talked about tokenized money, but we haven't talked about the role of banks, right? So assuming that we are happy with how the system works today and we say let's kind of bring that on-chain, wouldn't it be banks kind of that remain this main provider of tokenized money? And with that, I would be interested kind of what's happening in the banking sector around tokenized money.
Yeah, first of all, I would like to say that there's a lot of agreement to everything that has been said, MiCA regulation, use of stable coins, and the actual issue of not having cash on chain. Like that's what has been holding the industry back for years, so I totally agree on that front. Regarding the tokenized commercial bank money, there's initiative, also a lot of traction going on, how you can tokenize that. And I would like to add a little bit of color to the central bank money point, because that's the actual elephant in the room. When you mention cash on chain, we like to think of our industry. We need cash for the settlement of transactions. So we like the wholesale CBDC initiative of the central bank. Probably find that more relevant than retail-focused payments initiatives. And yeah, I think regarding the cash lag on chain.
The question is,
of course,
let's assume
you would like to see the deposits on the deposits on chain, and I was just thinking that how can I take it back a step, because we as a financial industry, we have a very certain view on the world, but there's more out there, right? We have some industry representatives here from, I think, Bayer and BASF and other companies here at this conference, and they also have needs that need cash, right, on chain. So I think the real question is how can you get cash on chain so that it is able to interoperate with all the multi-chain use cases that are currently out there. And I think CBMT, the banking associations, are working hard on coming up with their prototypes. The Bundesbank is working on a trigger solution to sort of bridge the gap, because I think one thing that we learned from an earlier panel is that the central banking money on chain is going to take years. I heard that they prioritize the retail sector and not the tokenized wholesale thing. So obviously you need something to bridge the gap. And there the jury is still out, whether that's going to be the stablecoin, whether that's going to be the commercial bank money token, or whether it's going to be something like the trigger solution by the Bundesbank or some other national banks within Europe. And to wrap it up on the digital money, I don't think it's going to be a winner-take-all market. It doesn't have this network kind of effects. I can see a future where you have different use cases being covered with different tokenized money. But there we are still in the very early phases of IoT and machine-to-machine payments that needs to figure itself out, and that's.
Yeah.
No, that's Alex, will you permit me to jump in with a question to you, actually?
Sure.
Because you probably have indeed the most concrete view on the stable coin as one version of on-chain fiat, right? With the new venture you guys are starting. Can you enlighten us in terms of the logic and thinking behind an asset manager actually launching its own stablecoin?
Yeah. So, I mean, thanks for that question. First, fully agree, Saul, with that final statement to say, in the end, probably the end picture will be several forms of money, tokenized forms of money addressing different use cases, right? So this is why I believe in stablecoins, but I also believe in central bank digital currencies, because they are not necessarily, wholesale at least, they are not necessarily addressing the same use case, right? And I mean, I think that's a very natural question to ask an asset manager why they go into payments now with stablecoins, but when you look a bit closer, a stablecoin is actually pretty close to the core business of an asset manager, because a stablecoin always needs to be backed by safe assets, right? High quality liquid assets. And for instance, BlackRock does that for USDC already today. They have set up a dedicated fund, a Circle Reserve fund, that basically contains mainly US treasuries and which is backing the US dollar stablecoin, the second biggest, right? And this is how we kind of approach this topic by saying, look, a stablecoin is something very similar to a tokenized money market fund. We know how to do money market funds, so kind of that's our entry to that whole space. Second step, we thought about, okay, if we now offer a money market fund that's backing a stablecoin, we are pretty easily replaceable, right? Because there are others in Europe that can kind of issue money market funds. So why not going one step further and actually also become at least part of an entity that is the issuer of that stablecoin, right? And this is why we decided together with two partners, Galaxy and Flow Traders, to set up a new entity that's going to be called AllUnity. We are about to incorporate it. It's going to be in Germany, and we are going to hold a stake in that company and become, so to say, a co-issuer of a euro stablecoin, to kind of be a bit a more integrated part of that value chain, point one. And point two, let me be honest with you, the business case is also a bit more interesting when you're an issuer compared to a reserve manager. So that was a second reason. All right, with that, we have a bit more than 10 minutes left, so I definitely would like to go to tokenized assets now. Maybe Patrick, first question with you, and now I'm going to use one of the questions here, and they are way harder than the questions I asked, so I'm sorry, but going to read this out to you. I think it's a nice leeway into this last part. How do you see the future of tokenized securities and the role of blockchain in it? Can it effectively substitute existing custody and settlement structures? And should it? I think that's an interesting one. So, broad question, and maybe Patrick, you can integrate into that question maybe a concrete example of what you are actually doing when it comes to tokenization and how you believe it can help making our financial market infrastructure more efficient.
Absolutely. Yeah, I mean, to answer the question in the question, I absolutely believe that it should and it will. I think it's a funny reality that today, for example, as a borrower, credit is completely digitized and completely commoditized. If you as a German shopper go to any checkout on any website today, you can finance your purchase, you finance your holidays, whatever you need. In the SME lending space, you know, with players like Teylor, it's becoming the same way. It's getting credit is a commodity. The reality, of course, on the other end of the table, on the refinancing side, both for us, we have multiple funds that we run, multiple refinancing sources, and probably for all of the other alternative lenders in this room can probably confirm it. We've all got super cool underwriting and digital front ends and stuff like that, but in the background, if we look at a refinancing source, I'm still flying to Luxembourg once a month. I have the DHL guy knocking on my door so that I can sign papers. So probably in the kind of, let's say, back end in terms of refinancing and the, let's say, private debt component of our business, nothing has changed. And for me, it's completely illogical. Why would it be the case that in every other area of financial services is becoming digital and this area would not? Obviously, that raises the question: why with the blockchain? Why will it become digital with the blockchain? I think that there so far hasn't been a technology that has allowed it as seamlessly and as easily as we're seeing today. Although on the other hand, I think most, let's say, private debt players like us, I don't really care what the technology is in the background. I just need it to work. And so far, this seems to be the way that makes it work. So what we're doing, for example, as a test transaction with our Swiss partner, a digital asset company called Taurus, we're taking part of our private debt portfolio, 5 to 10 million in small business loans, and we're tokenizing it so that institutional investors can easily get access to this, easily move in and out of the position, that there can be a liquid secondary market. And I think this is the future, and it makes it also an asset class much more accessible, which in the end benefits everyone.
Can I maybe come in with another question that fits really well here? I mean, it has been phrased a bit more broadly, but maybe we can now target it at the example you have just given us. So it says here, people buy cars, not engines. Should we not concentrate on building practical applications which people are hungry to use instead of focusing on crypto itself or blockchain itself. And this is a bit what
Sure.
you said, right? The technology is in the background.
Yeah.
So maybe you can tell us what exactly is the advantage of kind of using tokenized private debt versus how the system works today.
Sure. I mean, I forever wrote the question. Believe me, I'm incredibly hungry to have this process digitized because as much as I love Luxembourg, I don't want to fly there every month for my board meetings for our funds. I don't want to sign thousands of pieces of paper. And maybe I would also like to spend a little bit less money on lawyers who are drafting millions and millions of contracts. So I think the need is definitely there. I think anyone here who works in kind of private debt or private equity will tell you that this is not a digital industry yet, and there is a need for this industry to digitize. And I think why, what is the significant benefit? I think the beauty of having kind of a standardized asset, I'll say it differently. In the past, you had the case that, for example, you had peer-to-peer lending. And the reason why the unit economics of peer-to-peer lending don't work is because you go to the peer-to-peer lending platform, you do a KYC, you have to set up a bank account, and you're just registering for this one product. If you have the ability to take whatever, this loan or this batch of loans or this tranche of loans, and you have it in a digital asset that you can then access over any exchange or through wherever you have already done KYC, it becomes much, much cheaper and much, much faster. The settlement gets easier, the costs are lower, and you just have the ability to access a much wider range of investors and customers.
So accessibility, tradability.
Absolutely.
One related question maybe for Christoph and Mir, you two also from the audience. With respect to tokenized assets, how far are your respective organizations with the adoption of tokenized securities, maybe from an exchange point of view and an asset manager's point of view? This is a specific German regulation, so probably talking about the EWBG, which may consider a big advantage for Germany to manifest its position as a crypto finance hub. So do you want to start maybe with the asset, and then Amir talks about the trading of these assets? No?
Yeah, from an asset perspective, two kind of roles we have as Union Investment. On the one hand, we are investor on behalf of our clients, meaning we invest in cash equities, fixed income products, FX, and derivatives. On the other hand, we are also issuer of our fund shares. And both areas can be tokenized. So you were referring to the electronic securities law, which came in place in Germany in 2021. There's the so-called role of a crypto registrar, meaning asset managers like us, we could apply for a license. And rather than having the global documentation with the CSD, with the central depository, we would manage, when getting into the role of a crypto registrar, we would manage our issuance, the issuance by our own. So that's point number one. Point number two, and that's where we were already involved for the last couple of years, investing in tokenized assets. So we've had the first big public issuance, and this was back in 21, European Investment Bank, where we as Union Investment have been among very few buy-side asset managers, investors in these products, and onwards we've had a number of use cases. We believe this year could be the kind of hockey stick year for the industry. We will get secondary market trading via DLT MTFs in 24. We have the ECB with the exploration phase when it comes to wholesale central bank money. We have MiCA kicking in. So our expectation clearly is that in terms of investing in tokenized kind of traditional assets, we will see much bigger issuance. And looking beyond the road, what's important for us, it's not just a stupid copy-paste we are making. Traditional assets copying into the tokenized format. A token is much more intelligent than a pile of paper, which we have today as the format of securitization. When it comes to data, when it comes to reporting, just to mention some use cases. So I'm sharing what you were saying. It's faster, it's cheaper, we have less risk.
Yeah, I can fully agree with that.
Once maybe Mir, and we have 4 minutes left, maybe 2 minutes each. I've become more and more skeptical about tokenization, to be honest, over the last years, because we haven't seen that progress. That so I already was talking about that hockey stick 3 years ago, and I keep repeating it. The hockey stick, we're going to see it next year, but it somehow never comes. So I've become a bit more cautious. And Mir, I think one big problem that we have to solve is tradability, liquid secondary markets when it comes to tokenized assets. And this is where you guys come in.
Oh, definitely. And this is where we want to come in for sure. Again, I can repeat, wherever the clients want us, we will be there. But I'd really like to address the point that you're mentioning, Alex, right? My view is that our clients are not really convinced of the immediate short-term benefits of doing it on a tokenized system than keep doing it in the current system, right? Much of it has to have to do with the load, the scale, which we certainly aren't going to have in the beginning, right? So this is also my view, and we are basically tailing our pace to the pace of our clients, right? But it's clear we need a secondary trading mechanism, DLT, MTFs, or in other form, regulation allows both options, or any option actually. So it's clear that we need that. What we also, I think, need is an end-to-end value chain ecosystem where if a client wants, doesn't have to worry to go somewhere else to get some part of a value chain, right? Issuance, primary placement, secondary market, settlement, custody, asset servicing, you name it. But at the same time, this end-to-end value chain needs to be in a modular form so that certain clients which have their own scale and want to do some part of the value chain themselves, such as issuance, as Christoph alluded to, that it's as modular as to allow those use cases as well. But really, we are there as the clients are ready. However, I really do not see yet this hockey stick being very shortly before our doors. But it's coming. It's going that direction. So it's about dipping our toes into this, learning, because these capabilities are certainly not built overnight, right? Yeah. It takes years to build workforce capabilities, technical capabilities, partner networks. So it's start early is, I think, definitely the right choice.
Yeah. So I have a fun final question in a minute, which will also be addressed to you. So get ready for that final question. I'm interested in your opinion. But Saul, last.
Yeah, just touching on Miryusup's point, I think is right. The value chains are being disrupted. But the question from the audience was, how far along is your organization? Right, and I think one thing is we do have institutes within our group that tokenize real estate and renewable energies, and already have exactly these issues. Do you need MTF licenses? What kind of a secondary marketplace do you have? So exactly to your problem. And the other thing, we also have an asset manager within our group here in Frankfurt called Deka Bank, and they spun out a private permissioned blockchain that we currently pilot to do the refinancing. So that instrument on a private permissioned blockchain within our group. So just touching the point on how far along is your organization in terms of adoption, I wanted to make that point.
Perfect, thanks. So Stefan told me he's going to chase me off the stages if I take too long. So we need to wrap up, unfortunately. But I have one last question for everyone here, and of course for you guys here on stage. Just to get a bit of feeling where we stand as a market and where you think we are heading. So, which of the following three scenarios do you believe will arrive first? Okay, which of the three will arrive first? Scenario number one, Bitcoin at 150,000, Bitcoin at 150K. Scenario number two, the go live of the digital euro, the retail CBDC. Scenario number three, 30% of all DAX companies in Germany have issued a tokenized bond. So who is for Bitcoin at 150K? And I'm raising my hand right now. Oh, that looks good. Okay. Who thinks before Bitcoin reaches 150K, the digital euro is going to go live? Okay, that's maybe like 5%. And then who thinks 30% of all DAX companies will have issued a tokenized bond first? Yeah, that's maybe 6%. Okay, that's Bitcoin a clear winner. I think we can leave it there. Thanks a lot for joining the panel.
Alex, sehr geil.